The Phoenix housing market is turning. As we are getting into the fall, there was so much anticipation of lower rates, a busy fall, and I'm telling you right now, I don't think we're headed there. We are looking at that today, plus why this economist says that more than half of the country, half of the states in the country are already in a recession and what that could mean for housing. Let's take a look. Thanks for joining me today, you guys. What you're going to notice as we're looking at the CMI for every single major city is that there are a lot of red dots. And you'll also notice that Santan Valley has now made the list. But look at all of these red arrows. We are seeing red arrows pointing down on many of these cities. Why? Because we are seeing inventory increase and a lack of demand, to be honest. And I wanted to share this in the beginning of this video because this is really kind of setting the tone for what's actually going on here in Phoenix. Now, the Cromford Report is saying that the average change in the CMI month over month was negative 1.1%. It's the first time we've seen a negative number in probably about a month or so. That's down from 0.4% change that we saw last week when we looked at those month over month numbers. And they say our expectation is that this trend will continue until mid-November. And then we all know what happens mid-November and beyond. Everything slows down because of Thanksgiving and Christmas and all of the holidays during that time. It's just very rare to see a lot of momentum in the housing market until we get to like the Super Bowl. So what does this mean for you? If you're a buyer, it can be a good time to take advantage, especially as things are weakening right now. However, if you're a seller, now is just really maybe not the most advantageous time to be listing your home on the market unless you really do need to sell. I'm not saying it's impossible by any means. In fact, we have a more balanced market than we've seen in a really long time in most places. However, you certainly aren't stepping into a market where you have a strong advantage as a seller. Now, when we look at all of these cities, it's great to see the CMI. As a reminder, anything over 110 is considered a seller's market. Anything between 90 to 110 is a balanced market, and anything under 90 is a buyer's market. So we have a good number still in a buyer's market here, a couple in balance, and then a good number in seller's markets. But it's hard to determine exactly what is driving that until you look at the supply and demand index on every single city. And the Cromford Report gives us this information, which is so helpful. So if that would be of interest to you, check the description below. You can request information for supply and demand within your city. Now, just to give you guys a visual on where we're heading with the CMI, because we've been, kind of all over the place, and looking at that chart, sometimes it's hard to figure out what's going on. But we had an increase here over the last couple months at the kind of end of the summer, July until about September, we started to see the CMI increasing because our supply was going down. But now we are clearly seeing this downward trend in the CMI, mostly because our supply is starting to go up and our demand is not really keeping up with it despite the change in rates that we saw a few weeks back. So you'll notice that the overall supply is at 100.4, and last week and for a few weeks we were just under 100 with supply. 100 means that's kind of the normal range. So nothing to be concerned about with supply, but the problem is that our demand is 20% below normal. So again, not keeping up with supply. We have more supply than we have demand, which puts sellers at a disadvantage. So if we look at what's actually going on with active listings, you can see a pretty significant climb here over the last few weeks. We're sitting at about 25,333 active listings in our market right now. And the Cromford Report is saying we have plenty of new supply coming on board, and active listings without a contract are continuing to pile up. They rose 1.85% over the last 7 days and look certain to exceed 25,000 across all areas and types of listings over the next week. Now, for the active listings, that also includes anything that's pending, whether it's contingent on a buyer's contract or just pending under contract in general. That is up 2% over the last week, and they say it will likely exceed 28,000 shortly. And they're saying across all market segments, so no matter what type of property or price range that you're in, sellers would be in a much better place if they had fewer competitors. The supply at the low end of the market exceeds demand, and this suggests that first-time buyers are thin on the ground. The low end of the market, supply significantly exceeds demand. So suggesting that we don't have enough buyers on the lower end of the market to absorb the amount of listings there. So great news if you are a buyer or a first-time home buyer looking in kind of that lower priced market segment here in Phoenix, you have a little bit more leverage. You probably have more options to choose from and not as much competition, which is always a good thing if you're out there looking for a home. Now, all of that is for resale homes, but on the new construction side, it's not looking so pretty, not only here in Phoenix, but across the board, across the US. And I have something to share on that towards the end of this video. But the Cromford Report is saying new home builders are expressing disappointment that stronger demand in late August and September has not lasted longer, and they're scaling back their building plans. They do not want to end up with too much inventory of finished but unsold homes. We've also seen that stock prices for some of the major public builders have dropped sharply over the last week. I know from experience, our team who has been negotiating with builders for our clients with new construction have been seeing a lot of opportunity for some massive deals and incentives. So while it may not be the best time to buy depending on your situation, if you are planning on buying and if you have been considering new construction, there are definitely some reasons to take advantage right now. And by the way, if you just want to check out what new construction options there are, check the description below for a link to see that information. So overall, the shift in the market, especially here in Phoenix, is shifting more towards buyers. We've had a glimpse of hope that sellers were going to have more of an advantage. Mortgage rates were going to go down, demand was going to go up, and we were going to have this busy fall. Although I never thought that was actually going to happen, it seems as though this is what is playing out. We are starting to see inventory increase as we typically do this time of year, and that buyer demand is just not there. According to Redfin, more home sellers test the market, but buyers aren't budging. This is a national article talking about how pending home sales are declining, with some house hunters waiting for mortgage rates to drop lower and some feeling jittery about the economy. At this point, we're still in a government shutdown. Mortgage rates haven't moved all that much, and I'm going to share that in just a moment. But there's just not a whole lot of certainty for buyers to be like, yeah, I am going to throw money at this house right now if they aren't already planning or need to do it or feel very financially stable. New listings of homes for sale rose 2.3% year over year during the 4 weeks ending October 5th. The biggest increase in over 3 months. Some sellers listed their homes in September as the weekly average mortgage rate dipped to 6.26% in hopes that lower rates would lure in buyers. But buyers aren't budging. And I think really the death of sellers is when they're trying to test the market. The best thing you can do in this market right now, if you do need to sell your home, is actually price it correctly. Don't go out there trying to test the market. That's never successful, especially in this market when we have fewer buyers out there and you have a lot more competition. So as I said, they're saying some prospective buyers are wary of making a big purchase while the economy is uncertain. With the government shutdown, recent weak jobs reports making Americans insecure about their finances. For buyers who are motivated to move and have the means to afford today's still high home prices, the silver lining of the slow market is that they have negotiating power. And that is true, not just new construction where we're seeing a lot of those incentives, but even on the resale side, it is very common to get seller concessions negotiated into the deal. And, obviously not paying the list price, getting a lower price negotiated if that seller is not priced correctly for the market, and any other types of things you can negotiate. Oftentimes you have a little bit more leverage, especially if the home's been on the market for 60, 90, 100 plus days. So mortgage rates haven't moved all that much. They're around 6.32%. This is the 30-year fixed as of today. Hasn't been a whole lot of economic news because of the government shutdown, so we just really haven't seen a ton of movement and haven't jumped up too much from that low that we saw a couple weeks ago when we hit 6.13. So where we're at today, just really not that much higher at 6.32. Whether or not rates are going to go down much more for the rest of the year, kind of hard to say. My guess is going to be no. I don't think they're going to get under 6% for the rest of the year. And I don't know that we're going to see too much movement downward. That's just my anticipation. We'll see what happens and also how long the shutdown continues. So if you're ready for some more good news related to the economy and the government and prices, this article article from Fortune, roughly half of US states are effectively in a recession and hanging on by their fingertips. Lovely. So chief economist Mark Zandi told Fortune that 22 states are contracting and many lower and middle income households are hanging on by their fingertips, struggling with debt and slowing wage growth despite steady employment. He's saying that GDP was up a healthy 3.8% in the past quarter. Unemployment has stayed at a steady 4.3%. So why do things feel so tough? And the answer is, depending on where you live and who you are, the environment around you is recessionary. And I think that's so true because there are a lot of areas that are being affected differently by things going on in the economy. And the same happens with the housing market. Some areas are really hot and very strong, where others are quite a bit weaker. And so state by state, some of those economies are contracting while others are seeing growth. And I think that's why it's kind of hard for us to define exactly where we're at economically right now. And there's so much varying in opinions because some areas are different than others. States contributing to the most GDP, California, Texas, and New York, are all in the clear, pushing the overall growth of the country into the green. But for those who don't live in those wealthier states, they're saying things don't feel good. He told Fortune that lower income households are hanging on by their fingertips financially. They've got a job, so that's why they're still able to spend and remain engaged in the economy. But increasingly, the grip feels more tenuous because no one's getting hired. He goes on to talk about federal job cuts, tariffs and trade uncertainty, and regional dependence on agriculture, manufacturing, or goods producing sectors. He says that the job market is actually weakening in many states, especially those with more exposure to goods-based industries. So all in all, he's saying that these state level issues are kind of the underlying cracks below the overall economy. So even though things may read to be a little bit more stable when we look nationally, there are those underlying cracks at the state level that could eventually turn into a recession across the board. We're not there yet. It seems very close, however, and he said some states are kind of already feeling the heat. So this is all important to understand because, of course, it will affect the housing market as well if we do go into a recession or start to see a lot more of those issues going, state to state and becoming more of a national issue. Now, I mentioned that we're seeing some pretty big incentives and new construction really feeling the heat and kind of some weakness all across the country, but especially here in Phoenix. This recent article, Home Builder Unsold Completed Inventory sits at a 16-year high. They're saying that the number at the end of August of 2025 reached its highest level since July of 2009. However, the supply isn't evenly distributed. So there's some states that are seeing more or less of this. Particularly, the peak 2025 housing market saw softer than expected conditions in many parts of the Sun Belt. So the new construction inventory of single-family homes has been rising, and it shows 2016 to 2025 of how much unsold inventory there is. So in 2016, we were looking at 61,000 all the way to 2025, 124,000. Now, when we look at this graph here, this is showing back in 2005 through 2009 what the unsold completed homes for sale looked like, and we've thankfully not hit this peak. Hopefully we've learned our lesson, but it is still increasing. And again, showing this is the highest number that we've seen since July of 2009. So we're getting kind of dangerously close to those numbers. No wonder why builders are kind of stopping their building and starting to offer crazy incentives to get these homes sold and off their books. So as I said earlier, if you're someone thinking about new construction, it could be a really great way to go for getting some deals, so to speak, right now. Of course, there are deals to be had in resale homes as well. And I think as we get further into the fall, as a buyer, you'll begin to have even more of an advantage. But given the conditions of the economy and all the things we were just talking about, of course, I always advise that you don't jump into that unless you feel financially ready to do so. I'm very interested to see how the fall plays out as we're seeing this increasing inventory, especially here in Phoenix. I'd love to know in the comments below below. What do you think is going to happen? Are we getting into a pretty deep buyer's market as we get towards the end of this year? Let me know your thoughts. And also, if you're interested in that supply and demand in your city or new construction homes, make sure to check the description below. I'll see you guys next week on my next market update.